Hello, this is James Smith at GannAnalysis.net. My website is www.gannanalysis.net. We're doing some upgrades right now, so bear with us. A couple of days, you're not going to be able to access the website, but it'll be up and running again next week. Today, I want to cover Netflix. You can see this chart doesn't look that bad. You go up, you go down for 66 weeks, then you go back up, and presumably you go down for 66 weeks into late October, and then you go back up again. I mean, that's what a lot of people would assume, because it looks, it doesn't look unreasonable. You have a consolidation ABC type pullback, and this is more just a consolidation. It actually looks better than this. And you think, well, it should go back up again eventually. And maybe that's not an unreasonable assumption. But the reason we do Gann is because it gives you access to information which other people don't see, because they don't see the hidden geometry of the market, the time and price relationship. And that's what I want to show you today. If you look at this anchor point from this high, 716.16, and you say, well, wait a second, it never got that high. Look at this. This is not 716. Well, that's because you're looking at split price history on this chart. And the way Gann did it, he always used unsplit price history. The price at which something trades is the price that matters. That's the way Gann viewed it. So if you're looking at something that's been manipulated by your data vendor, you have to go in and untick it, or select unsplit price history, so that you can get the real history and not something manipulated. Because this is where they split the stock. When it was at 716, it drops all the way down here. That's not a bad tick. It's just they split it, and then boom, it starts crawling back up again. So the square of the high, in this case, we're using a price unit. The scale is 2.2 points per week. So that means that from the high, the 1 by 1 descends at a rate of 2 points per week, and the 1 by 2 would be 1 point per week, and the 2 by 1 would be 4 points per week. Those are the three main lines that we're talking about. And where the 1 by 1 crosses the level of, well, in this case, since we're doing the square of the high, it goes to 0. Normally, if it's a square of the range, if it crosses the level of that low, and you're doing a square of the range, that would be where you complete the square in time. But since we're doing the square of high, we take the line, we draw it down, and where it meets 0, you have the completion of the square in time. And that happens to be May 27th, 2022, about a little over a year from now. So on your calendar, just go there. I don't know, maybe you don't have a calendar for next year, but in your computer, if you have a calendar, you can circle May 27th, 2022, and just put a reminder. Tell yourself that, hey, look at Netflix in late May 2022, about a year from now. And the reason I say that is even if you don't know what kind of turn you're going to get, you'll get an important turn at that time, because you're squaring out the high. And why do we know that? Because look at this. You got a low here, 1/4 of the distance through the square in time. And most impressively, you sold off half the distance in time through the square. It gave you the exact time of the low, December 2018. You rallied strongly. You go higher into the 3/4 division of the square in time, and that's kind of a high. Granted, it sort of went sideways. This is all consolidation, and I think you're going down when you take out this 2 by 1 line, this green line. You can see you're at 499 now. You take this out at around 498, boom, you should be going down to 358 and probably even lower. So this is what I say about the hidden order of the markets, because, if you did not, if you're just looking at normal data from your average data vendor, they're not going to show you unsplit price history, and certainly they're not going to show you the Gann square of the high. So you're not going to know that that's support. Well, now you know. And you also know 358.08 is half the high, which, of course, the high was 716.16, so simple math. 358.08, that's your key level to watch. And going back, if you go back to the other one, all right, you see a high here at 575 and maybe slightly higher at 593. Somebody who doesn't use unsplit price history, even if they're doing Gann, they're making a mistake because they're going to say, well, half that high, that's where the 50% mark is. Well, it might still be relevant, but it won't be as important as this one. 716.16, half the high is 358. That's the important level to watch. When you get down there, you can look for support. It might be a possible bottom, especially if it's all the way here into the end of May 2022, and you're down here, let's say you're at 358 and you're bouncing back, that's a great time to buy. But if it takes this out and it's still going down, let's say it takes it out in January of next year and it's still going down, well, then who knows? Maybe it's going all the way down here. You don't know. Right now, we don't know. But we have a roadmap. That's the whole purpose of the square of the range and the square of the high. It gives you a roadmap to the future. You know what road signs to pay attention to along the way. And this one is a big stop sign. It says stop and watch to see what happens at 358. If you take it out, you know you're in deep trouble. You're going to just keep going down. If you bounce off it and it happens to be late May of next year, oh, okay, maybe you got a buy signal. So that is what I mean by a roadmap. Everyone says, well, should I buy or should I sell? That's too simple a question. The reality is with Gann, you just pay attention when you come to those key junctures. You go left, you go right, you go straight. You'll know because the market's going to tell you. But right now, the key juncture here is this 2x1 line. It's telling us to pay attention. If you take out, say, 498, you know you're going to keep going down. I'm kind of bearish on Netflix because, it seems like you get all kinds of free services that you don't have to pay for on the internet. Why would you buy a movie service? Why would you subscribe to Netflix when you can get all this other stuff for free? I don't get it, but they do have a lot of people and they make their own movies, and, original content, etc. So I get it. Some people really like it. They want to buy it. But the other thing going against Netflix right now is the economy is opening up. COVID's going away. People are tired of watching movies. They want to get out. First thing they do is they cancel the Netflix subscription and say, we're getting in the car. We're going on vacation. We're done. We're going to get out of this cabin. We've got cabin fever. So I think even if Netflix is a great company, you do have to wonder if they might suffer from a lot of people saying, we've seen enough movies for now. It's summertime. We want to get out there and enjoy nature. So I think that's partly what's going on. But that's not the main reason I'm doing it. Right now, I want to show you, as I pointed out, the low. If it caught the low at the 50% mark, chances are we know this is going to be important. Now, even if someone wants to argue with me and say, hey, I don't think it's selling off into the completion of the square. I think it's going to rally into it. So maybe it goes down here and it bounces back. That doesn't change the point of view. As I say, this is a roadmap. It mainly tells you what's going to happen when you get there. So in other words, if you sell off to, say, 358 and you bounce back to this level, say around 537 by late May of next year, then all right, then maybe you have a sell signal. But, so that's why I say it's a roadmap. It's not a forecast. You're looking to see what the market is doing when you get to that key juncture in time. And the key juncture, again, is May 27th, 2022. Again, you go to your computer, jot that down, send yourself a reminder, and just, a year from now, look at it and see what it's doing. And you'll find it'll be amazing. You'll get a lot of insights into the market by realizing something that you've been told you shouldn't do. You all know it. You've been told, don't time the market. Nobody can time the market. Some billionaire investors tell you, don't try to time the market. But Gann told you just the opposite. Always time the market. Time is more important than price. Time is everything. When the stock has reached its time, it will change trend. That's what I'm trying to tell you. Completion of the square in time, late May 2022, is going to be a change in trend. Right now, we don't know for sure that it's going to sell off into that. It might bounce here and rally back. But we do know one thing for sure, you're going to get a turning point in late May 2022. It's, mark my words, play the tape back for me in May of 2022 and tell me I'm wrong. I don't think I will be. I think the square of the high is not bulletproof, but it's very important. And the fact that it's hit here, it's hit here, it hit here, you know, these are the big divisions of the square in time. We have a good idea that it's going to hit on May 27th, 2022. This is very cool. Now, I want to show you something else. Just to remind you, split price history versus unsplit. You could not draw this square of the high correctly without unsplit price history. This is the same thing coming down from the high, but notice this is the split price history versus what I just showed you, unsplit price history. We needed that all-time high at 716 to give us the anchor point. Remember, we're drawing the square down from the high. That is the square of the high. So we can't even do that correctly if we're using split price history. I just wanted to show you the same chart using split price history because, you know, this is not the way you would do it. You can't do this. You can't come up with this hit right here using split price history. You can only come up with that hit if you're using unsplit price history, because then you can draw the square of the high down from high and get that low here. Amazing if you had bought that right there and you'd said, hey, I know this is going to be a low. I know time is more important than price. I know that the media will tell you just the opposite, but I also know, hey, this thing is forming a low. Let's say a week or two later, you say, hey, this thing's going up. I'm going to jump on board. You rallied pretty good. And when it got to the 50% mark, you'd say, hey, well, maybe I'll take a little bit of profit. Or maybe you got it all the way up here and you said, hey, this looks like strong resistance. And you sold and it came back, found support on this. And then when it started to go up, you know, you might have gotten chopped around to here, but look at this rally. You knew you were in a congestion zone when you got to this point because you're 3/4 of the distance through the square. You've completed something. And it looks like all you've been doing is, trading sideways. Everyone says it's a bull market. Well, not for NFLX. It's, since July of 2020, almost a year, it's been trading sideways. This is a massive distribution. Remember what happens. Markets start from a low, they go up, and then at the top you go sideways for a long period of time. That's called distribution. And that's where strong hands are turning over the stock to weak hands. Smart money is giving away, they're selling Netflix to dumb money. And dumb money is not smart enough to realize they're about to get slaughtered. So when this gives way, you're going to get slaughtered. So this 2x1 line, this green line drawn up from 0 is key support. You're not going to get that any other way. Show me some other analysis that will give you that support line without doing the square of the high. You can't do it. And the only reason that this is valuable is because the geometry of time and price is what Gann tried to explain to people over and over and over. Time and price. You can't create the square without referencing both time and price. So for a technician to tell you he doesn't look at time, I'm sorry, he's an idiot. You have to look at both the time and price, and that was the genius of Gann. He showed you both time and price and showed you the relationship between time and price. And when you get the right scale, as I pointed out before, we're using a price unit of 2 points per week. everything falls into order like magic. And you're going to have to play around if let's say you're doing IBM or Microsoft or some other stock. The scale's not going to be the same. Every stock has its own vibration. You're going to have to play around till you find the right scale. But big round numbers are obviously more attractive. It seems to work better that way. In this case, 2 points per week is a pretty solid number. I like it. It works out really, really well. And the proof of it is that you get lots of hits. So when you see that you're getting a lot of hits doing your Gann square with the scale that you've chosen, you know you've got the right scale. So other people are going to look at you sideways. That's fine. Tell them to get over it. If they don't, just ignore them. But the reality is, I'm saying halfway through the square in time, we got a low, and you got a vicious rally. So, and it just kept going. So if we do sell off into late May, I think that'll be an exceptional buying opportunity. Or alternatively, if we bounce off the 50% mark and rally back, that'll be an exceptional selling opportunity. Either way, you're going to have a trade. That's what I'm saying. If you understand that Gann is not a forecasting system as much as a roadmap, with these Gann squares, they're showing you where you need to pay attention. And that's what it's all about. It's about paying attention when you need to pay attention so you spot an opportunity. If it rallies up to this level by late May, that'll be a selling opportunity. If it sells off all the way down here into late May of next year, that'll be a buying opportunity. So that's the main thing I want to get across. It's not about telling you to buy or sell NFLX. It's about telling you how to use the square of the high to your best advantage. Don't forget dilutions. If you're looking at split price history, which most data vendors will show you, and you're trying to do Gann, you're missing out on a lot of information. You can't do this square of the high properly without using unsplit price history. So I hope this has been helpful. My name is, again, Jim Smith. If you like what you saw here, as I said, we're upgrading the website. Give it a couple days. Next week you can come in and register. You'll get some free reports. And if you really like the service, I'm telling you, I haven't even shown you the best stuff. That's reserved for clients. But if you really want some really awesome trades right now, I'm telling you, 3-month trial subscription. It's not expensive. You try it out for 3 months. You see how you like it. If nothing else, you'll learn a lot about Gann. And hopefully you'll make a bunch of money on some ideas that I'm coming up with right now. Clients know what I'm talking about. I can't give away the store. I can't show you my best ideas here. But this is kind of an interesting thing educationally. But if you really want to make a lot of money, once you register and once you sign up, you pay for the service, ask me what those ideas are and I'll tell you. So good luck with your trading. I hope this has been helpful. Have a nice weekend.